Hi, I'm Greg Hunter. Welcome to Watchdog.com. With us, a guest that came on a couple of years ago, and he was in the camp that steadfastly said, "We're not going to have a crash, not until 2017." He certainly said this in late 2015, 2016. We're going to have a crash. Not going to have a crash. He said, but in 2017, he said, if you're not prepared at the end of 17, if you're not prepared correctly, you could lose everything you have. I'm talking about Charles Nenner. Charles Nenner of the Charles Nenner Research Center. Charles, thank you for joining us today on Watchdog.com.
Yeah, it's nice to be back.
Well, that you said that. I want to get into what you said, and it's almost an exact quote. You said if people aren't properly positioned at the end of 2017, they could lose everything they have. Is it go time? Are we almost there? Could you explain that?
Well, I think we were there already. I wrote in the research since 2 months that it's too early for the big top. That should be end of September, October. But in order to be cautious, we treat every short-term cycle top as a major top. So we personally are totally out of stocks.
You're totally out of stocks at this point.
Totally, yeah.
And where did you put your? What are you telling clients and people to put their money? What are you telling people to do?
In the bond market, we're expecting a new high in the bond market. So a new bull market in bonds is developing.
And is it because of the economy? A lot of people think this is kind of totally opposite, and I'm not questioning you. I'm just saying a lot of people were calling for higher interest rates. Why are we going to get lower interest rates and then a rise in bond prices and a crushing of interest rates? Why is that happening, in your opinion?
Well, a couple of years ago, we talked about the Fed, and I said, I don't understand the Fed. I mean, I developed systems that can tell you where unemployment, inflation is in 1 year, year and a half. But they seem to be surprised by every monthly number that comes out and then have to rethink it. So I wrote already half a year ago, I think the Fed is on the wrong side. And why on the wrong side? Because the people in the Fed usually now are in their 60s, maybe 70s. And what they remember is inflation, inflation, inflation. It's very hard for them to turn around and say deflation, 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 as it is for most market people because they haven't lived through deflation. And I always say, in the last 500 years of investing, deflation is the norm. Inflation only started actually after Nixon got us out of the gold standard. And I think deflation is the problem, and that's why we see no hawkish comments really from the Fed. And I don't think they're going to raise interest rates. And again, we haven't come to the end of the Unrest cycle, which is the longest deflationary cycle, and we're going to have a deflationary crisis coming up.
And when you say deflationary crisis, true deflation is debt destruction. The bonds are no good, like the Puerto Rican bonds. They're no good. They're not going to pay. I suspect maybe Illinois bonds might get into some major trouble as well. But will you explain what you mean by deflation, a destructive deflation? Is it because the debt's no good, or please explain for us?
Well, there's not too much to say about it. There's just a cycle of inflation, deflation. Like, the dollar has a cycle, and at the cycle top, we says the dollar going down, and everybody says the dollar's going up. I said, I don't know what you guys are talking about. I see only my work, the dollar's going down. Why it happens, I can come up with many reasons. I think there's no reason. It sounds strange. We expected now some weakness in the market, so now we have this thing going on with Korea. And I wrote a week ago, you will see something will happen, and they says that's why the market comes down, and that's why people never learn how to approach the market because they think there is an outside event or an inside event that triggers everything. But this is based on what the situation will be in a year and a half in all financial markets. Now, of course, what you say about bonds is correct, but for the moment, I think the bonds can make a very big move up. So we invested in bonds. By the way, we're long gold. It hit our price target last night, and so we're selling right here. Not that I think it will come down a lot, but they reached the price target.
Let me come back with the bond market. So you think that interest rates are going to go up because the economy is going to slow way down. Is that right?
Yeah, interest rates will go lower because we're going to recession, maybe even a depression.
So you think we're going to go? You think the rates will go down? So you've seen the last rate hike from the Fed, and you think the rates are going down from here? Explain.
Yeah, at least they're not going up.
And Now, are the bonds going to get into trouble eventually, where they're just not going to be any good? We've got a lot of bonds printed out there, and they got a lot of people to pay, and a lot of debt to roll over. We going to get to a point where the bonds are just going to be no good, like Puerto Rican bonds?
Well, I'm not so sure about that, but if that happens, it's a year and a half away. So we have a first boom up starting over here, some weakness, and then a bigger move starting up in March next year. So for a while, bonds should be okay.
And then what about the stock market? If the bond market goes up, is the stock market, you said that that late 17, if you're not positioned correctly, you could lose everything you have. Tell me about what you see coming this fall.
Well, let me talk. Did we ever talk about years ending in a 7?
I think we have some, but tell us.
So let's repeat it. So it's very interesting. Years that ends with a 7 are usually the start of a big correction. So let's say 2007 is start of a big correction. 2007-8, big correction. 1997, 98, the Russia crisis, ruble crisis, big correction. 87, everybody remembers. 77. You can go on until there's only one exception, 1929. 1937 was a huge correction. 1929 was 2 years late. And the interesting thing is the cycle bottom has to catch up. So that's why they went down so fast, because it didn't have enough time left. Now, if you go back to 1800s, same thing, year with the 7. Now, I approach markets scientifically. So you can say, listen, this time I don't know what's going to happen. But, if something happens 99% of the time, you have to assume it happens again until proven differently. So that's one reason. Why that happens, I have no clue. But the other thing is, there's certain time spans of expansion in the economy of the United States. And this is so long going on, so I don't know where these, let's say, big brains are coming from that say, we're going to have more expansion, because it never happened in the last 200 years. So you have to take that into account. Now we're going to have more jobs. Well, unemployment is already 4.3. You can make any interpretation you want, but how much more jobs you're going to do when unemployment is so low, et cetera, et cetera. And I never get an argument why the market should go up. My last argument is this. A lot of stocks come out with good numbers and they don't go up anymore. That usually happens at the end. The Russell 2000 is not even up for this year. So something is going on. As I wrote is, I know market leadership has changed. I'm a bit old-fashioned. I see IBM, General Electric, stocks down 30% from the high. I don't see a market holding up when IBMs and General Electrics and all this stuff is going down 30% already.
So you think the direction for the market this fall, are you forecasting a crash for this fall?
Well, I'm forecasting, if you look 4 years from now, it's a huge crash. How big the first down move is going to be, I don't know.
But you think the next big move is not up, the next big move. You think the next big move is down for the stock market?
Yes, as we've been saying for years, and in the last quarter of 2017, we're going to top.
Next big move down, correct?
Correct, for 4 or 5 years.
Oh, for 4 or 5 years. Okay. And the dollar. I mean, I'm not a market cycle guy like you. I'm intrigued by the economy and all that, but even I know since the beginning of the year, I mean, we went from 103 and change to 91 and change on the USDX. I mean, that's a big move down in the dollar. Tell us about what you're seeing in the dollar.
Well, the cycle stopped, so we became very bearish on the dollar, and now in a couple of weeks, the bottoming. So it's still possible that the dollar will go to new highs. In any case, in a couple of weeks, if people really want to know, they should look at our research, because we publish it 3 times, 4 times a week. In a couple of weeks, we should see, according to cycles, a low in the dollar. Now, what the bounce is going to be, I don't know yet. If it means that it's going to bounce and then go lower, or we're going into a new bull phase for the dollar, it can still be a new bull phase for the dollar.
Why do you say that? I mean, it looks like we have all this debt, and some people at home, I'm not arguing with them, I'm going to say people at home saying, wow, we have all this debt, 20 trillion in debt. We've got, expenditures, depending on who you believe, between, going into the future is 100 trillion, or, people like, other people say that it's a 200 trillion. That go into our expenditures and what we owe. I mean, we just have a lot of debt. I mean, just a huge amount of debt. Why would the dollar be in a new bull market?
Well, You have to understand that I have to go back to cycles. Cycles predict the interpretation of facts, the mood of people. And when a dollar was up, we knew the same thing. We knew what's going to happen. Like with Korea, we know it's going to get more and more troublesome. Only when cycles are good and the market goes up, nobody pays attention. When cycles are turning down and the mood becomes more negative, we come up with anything that's possible, but we knew that already. So there's nothing new in this whole situation.
So in other words, you forecast the dollar having this weakness since the beginning of the year.
Right, right.
And then I want to move on to about specifically into gold. I mean, you said gold would not go down. You said there are some people in some camps saying that it would go down to 600 or 700 or 250, and you were like, no. You know, it's not going to go down much below $1,000, maybe a little bit, but that's the bottom. And that was a few years ago. And but what do you say about gold now? It's firmly into the 1,300 territory. Are we going to hit a new bull market in gold? Is this a head fake? Is it going to go down from here? Where do you think
we gave a buy signal about $100 lower, and the price target was around 30, 20, 22. I'm not exactly, but it's a matter of $1 or $2. We hit it overnight, so we sold our gold position. Cycle stopped in September. We could see some weakness, but I think that we, especially, and that's interesting, the same time that we get a big up move in bonds, March 2018, I think we're going to have a very big continuation of the bull market in gold.
Oh, so you're bullish on overall? You're bullish on gold. Why? Why are you bullish? Why are you bullish on gold? Why?
That's an interesting thing. I look at my computer and I look at a couple of lines and I see gold is going up. Why? Well, let's say first of all, gold goes up 50% in times of inflation and 50% in time of deflation. Most people don't know that. If like you're right, stocks go down and bonds are not safe, so where do you put your money? Well, also real estate will go down, so put it in gold.
What do you make of people like Jeff Gundlach making warnings, and Ray Dalio, the biggest hedge fund manager in the world, and he manages 160 billion, telling people to put 10% into gold? I mean, if Ray Dalio put 10% into gold, he'd have $16 billion in gold. What do you make of the big guys making all these warnings? What do they see?
Well, I don't know if they see it. If you remember, there was years ago in the Wall Street a column called "Hurt on the Street."
Yeah.
And okay, so what turned out in the end is the people had a big position, want to unload their position, so they were bullish on that position and present in the Wall Street Journal. I don't know. There could be people who need sellers, so they get everybody bullish, so they create a market to sell. So I wouldn't trust, not personally them, but I wouldn't trust anything that you hear or that they say.
So you would just kind of blow it off because people are, what they say, talking their book. You're always afraid of people talking, their trades, stuff they've invested in.
It's possible. It's not possible, but we're not sure.
Okay, all right. And what about silver? Just a quick talk about silver. Is silver going to be, gold along for the ride? A lot of people think silver is way undervalued. It's going to go way higher than gold. What say you?
Well, silver cycles are not as bullish as gold cycles. So we told people if you want to play the ratio, be along gold and silver, that's something that we back up.
And you think silver will be also up?
Yeah, but less than gold.
Percentage-wise?
Yeah, but remember, we hit the first upside target, so I'm not sure it will not soon correct.
And when you say buy gold, would you be a physical holder, a core position type person for clients in gold? I know you trade in and out, so you're probably using GLD and stuff like that. Would you hold a core position in physical gold or mining shares or something like that?
Mining shares. The problem with all these ETFs is nobody really knows what the value of the ETFs is. I think that's going to create a crash, and nobody's going to buy the ETFs because during a market meltdown, you cannot calculate what the price of those ETFs are. It's going to create so I'm very worried about these markets in the ETFs, and of course I prefer the gold shares. It will also give you 3-4% dividend, and if cycles are toppy, you can sell a nice in the money call against it. But I don't like the GLD and other ETFs.
Okay, and then you just said market meltdown. So it seems a little bit more severe than what you said before. So you think we're headed for a market meltdown in the end of this year? I mean, after all, you said if you're not positioned correctly in 2017, the end of 2017, you could lose it all. Could you expand on why you made that prediction and what you're seeing now, and explain that?
Well, I think we once talked that the New York Times called Prechter from the Elliott wave, and it says, "What's your downside?" And he said 1,000, and then they called me. I says, "I never calculated. I calculated. I came to 5,000." So I think the market goes to 5,000. Now, and again, in 1990, when life was good, the Dow was 5,000. So we can still have a nice life with the Dow at the 5,000. The problem is we come from 22,000. I still know people in the dot-com who bought stocks, and the stocks are worth less than 5% what they bought them from. And I know what happens if stocks go down. People are paralyzed. It goes down 8, 10%, then it goes back. They hope it's not going to go down. Until they sell, they lose a lot of money. And if the pundits continue to put in the head you do it for the long term, then they're going to lose everything. Well, not everything, but it takes maybe 20 years for it to come back to the same price.
Well, I mean, we had the we had the Nasdaq, and of course, a lot of companies went poof in the the 2001 dot-com bubble, and now the Nasdaq's where it was before. But there's a whole lot of stocks in there that weren't in there before.
Right.
So that's what you're saying. You're saying and let me underline this again. You are recommending no stocks at this point in anybody's portfolio. You just get out of all stocks. That's what you're saying.
Yeah.
Explain that. Expand on that, please.
Well, I started writing, let's be defensive. Then people say, how are we going to be defensive? It's very difficult for people, especially if they work with a broker who is a little bit, wants to have an input. I won't say most brokers have a big ego, but they want to have an input. And they really mathematically, the average broker doesn't have the knowledge how to be defensive for a whole portfolio. And you're still going to lose something. It's going to be very difficult. So what I don't understand is that people are always afraid to lose the last 3% and not worry about the next 50% down. I have no idea why that is. We have it now also. I once wrote when our upside target for S&P was to 2480. And I wrote, well, if we have another bounce, maybe it goes up 3-4%. So they all want to have the 3-4% that I don't believe in. And they're not worried about the meltdown. And I have been now for a long time in the markets. And I don't understand it. I saw once, it's a little bit connected. I once saw a report from Goldman Sachs when I was in Goldman Sachs. And they said that in financial institutions, if you are positive, instead of being realistic, you make better promotion. Because people want everybody to be positive about United States, about financial markets. It's simply, when I've been on CNBC many times, they never ask me what should I sell. They always say, what should I buy? It's a ridiculous world. And that's why people lose their money, because if you have that input 24 hours a day, you start believing it.
Oh, boy, that's a big call. That's a big call. You're not going to be invited on CNBC for making that call. Sell all stocks.
Well, I want to tell you something. I was on CNBC in 2014.
Yep.
And on the New York Stock Exchange, and they says, Mr. Nenner, have you never been wrong? I says, well, if you look back in 15 years of my newsletter, you see we don't make mistakes. So the guy continued, and then always they put it on their site, and they cut that piece out.
Ah.
So I said, I challenge you to find a major mistake for the last 50 years. He didn't know what to say, so they cut it out. They don't like to think like that.
That's sad. That's sad when you're on. I mean, it's sad. I mean, I just want to know the real deal. I mean, what is it? I just want to know the truth. And you tell the people that I don't have any stocks and getting out of stocks, and you're a stock guy, and you're saying
no, that's not true, because the research.
I mean, you're a Wall Street guy. I mean, that's what I'm saying. In other words, and I'm not trying to. You don't hear what you're saying from Wall Street pros very often. Whoop, get out of stock. You don't hear that very often.
But I will tell you why. Because Wall Street pros make money if you long stocks. We sell research. I don't care if the market goes up and down. So that's why I say take independent research. Don't trust the brokers. Don't trust research if people have an incentive. Now on CNBC, to all kinds of people that says below it, it says the portfolio manager here and there. Of course, they want to sell you something. We don't want to sell. We just tell you what's going to happen. Check out if we're right or not. We don't make money if it goes up and down, so we're neutral.
Ah, very good point. You don't make money whether it goes up or down. You just want to be right. You just
Right, I
make
can
money
tell
when
the
you're
truth.
right.
Yeah.
Yeah, I got that. Okay, I want to talk about your war cycles. I want to end with that because, and one of the other things you said, I'm just going off the top of my head about some of the things you said, and one of them was, this is a couple of years ago, and this is before, Kim Jong-un started going, crazy time, shooting missiles over the top of Japan, which happened just, last day or two. You were saying, the Middle East was flaring up, and you said, I don't see that at this time, right now. You said I think the real big problem is over in Asia. The stock market in Japan is going. Defensive stocks and aerospace stocks are going up.
Right.
They're catching a bid. It just tells me that they're expecting trouble. And sure enough, a couple of years later, we got trouble. Tell me about your war cycle, and let's start in North Korea. What's your war cycles looking like now?
Well, North Korea is not so long in wars. The war cycle is major wars for the last 3,000 years. We started with the Mandarin Empire in China, and we see that a very fixed cycle. Every so many years, there are wars. As if I may say something else, as I just saw on television, there was a peaceful march from right-wing people, even protesting at neo-Nazis, and I saw coming in all the left-wing people covered in black, and carrying bottles, whatever, and beating them up. And that's exactly the 60-year cycle in social unrest. So these cycles have exact why that is. Well, maybe the parents don't remember how it was before. I don't know what the reason is. So it's also social unrest is in a cycle. And apart from Korea, we should be very worrisome about the development of this social cycle in the United States because of the social media. Today a small group can have much more influence than a big group. And the other thing I might say is, I'm not afraid to speak up. Me being a European, I can almost not live in this country, US, anymore, because you cannot say the truth. I mean, you can't say what the facts are. So once you deny the facts, the small group can take you wherever you want. And we talked about Constantinople last time?
Yes. Refresh everybody's memory.
Okay, so in Constantinople, which was the Eastern Roman Empire, was besieged by the Muslims, and everything was burning down and destructed. And the big guys had the discussion if angels were masculine or feminine.
Yeah. That's right. It's stupid discussion.
And I said, now, I think the United States going under, and we're discussing who should go to which bathroom. Sounds familiar.
Yes, that's it. Yes, I remember that. Yeah, you did say that. So you're saying that what we have going on is a part of a bigger cycle, the social unrest and this, Charlottesville and Antifa, which is communist in its roots.
Something happened yesterday. I just saw on television. I don't know. I was traveling, so I don't know what happened, but I just see all these left-wing people, with masks beating up on the right-wing people. But you're not allowed to say that both parties are equally guilty. So I've never seen from Charlottesville. I've never seen a video. I've seen one video where the left comes with weapons and beating up the right. But nobody shows you the footage. You just said comments, you can't say that because the left is always right. So I would worry more about the social unrest and breaking up the United States than Korea.
So social unrest is a big problem. You're saying that it's a big problem for your money as well. I mean, social unrest could disrupt everything, right? I mean, the way of life, markets, politics. Explain.
So can you imagine if the government doesn't have enough money, they have to pay food stamps and any support? People are going to riot. They're not going to accept it.
Wow, social unrest is a bigger problem than North Korea. Wow, that's a big statement. That's a big statement.
I'm sure you're going to remind me for the next 10 years.
Well, I mean, I love listening to you, and I'm a good student of what I mean, I have people on, and they say things, and it sticks with me. Like some of the things you said that we'd have problems in Asia, and because of all the aerospace stocks going up in price, something pretty close to that. And for years, I mean, I was thinking that this thing would crash. Actually, we did get a crash the night Donald Trump got elected, but they turned that around and was limited down on the futures. But still, I mean, you said no, 17. No, it won't go down until end of 17. That's when we're going to have trouble. Sure enough.
Please, we give out for a couple of months our research for free. Times are so dangerous. Be welcome to get our research. It will help you through the bad times.
Okay, so listen, I'm going to wrap this up, but you're CharlesNennerResearch.com. I'll put the links up. You have a free trial for the research. Is that right?
Correct.
We'll go ahead. I'll direct people to the site. Charles Nenner, that is very interesting. On the dollar that you think it could go up, and that gold, you're in a bull market. North Korea, not as big of a problem as the social unrest. That's a big one. Also, market meltdown starting this fall, years ending in 7. Charles Nenner of the CharlesNennerResearch.com. Charles Nenner, thank you for joining us today on USAWatchdog.com.
Welcome. We'll talk again.
We will. I hope so.
Bye.